Good afternoon, everyone. My name is Nelson Neal, and I wanted to welcome you to today's CHS Around the Table Live. This is the first in a series of Around the Table conversations and commentary on agricultural issues that are important to you. Today, we've got a lively group of topics to discuss, and they're all related to grain markets, including the policy forces that are at work and at play, and also taking a look, a deeper dive into supply and demand across corn, soybeans, and wheat. Today's format of discussion is going to be panel style. It'll be a question and answer session with some of our experts in the field. And these experts are coming to us from CHS Government Relations, our newly formed CHS Global Research Group, and of course, outside experts that are partnered with CHS. Afterward, we'll open to the audience, to you, for our questions. One thing to note, for those of you who aren't aware, we at CHS recently launched our CHS Global Research Group. And this team consists of a team of 6 highly skilled individuals who were selected from throughout the company based on their expertise in key areas. This new group is going to be responsible for harnessing all of the commodity and market insights across CHS and sharing those insights with owners and customers to help inform decisions throughout the cooperative system. So stay tuned as we pull this group together and begin to disseminate some of that information. Just a little bit of housekeeping before we get started with our Q&A and our panelists. The first is that you may hear some forward-looking statements today. And as always, we would caution you not to put undue influence or weight on what you may hear from our panelists. The second bit of housekeeping relates to our question and answer session from the audience. And that will occur at the end of the moderated Q&A. And there is a question icon at the bottom of the screen for each of you, should you have a question, to bring it to the forefront so that we can get it answered and addressed by our group of panelists. So with those housekeeping items out of the way, let's go ahead and introduce our fine group of panelists. First up is Will Stafford. Will is currently the Washington, D.C. representative for government relations at CHS. And his focus with CHS is all on ag and trade policy. And certainly we have a lot of emphasis at CHS on both of those topics. Prior to coming to us in 2019, Will served on the staff of Senator Pat Roberts of Kansas, and he helped craft the 2018 Farm Bill. And prior to that work, he also served with the National Association of Wheat Growers as their Director of Government Affairs. So welcome to the panel, Will. We certainly look forward to hearing from you. Our second panelist in the group is Ken Erickson. And Ken is Senior Vice President at IHS Markit, formerly known as Informer Economics to many of you who have worked with those folks in the past. Ken heads up the Agriculture Client Advisory Services for IHS, and he's been with the firm for over 20 years and has served in a variety of roles and capacities there at IHS and Informa. Once upon a time, Ken even served as an ag statistician with the USDA. Certainly an interesting career. Before we move and close out on Ken, I would like to say that IHS Markit is an enterprise research and information partner with CHS. So that's why we're lucky to have Ken join us as a panelist today. So welcome, Ken. Delighted to have you and welcome your thoughts today as well. The final panelist is Joe Lardy. Joe is a member of the previously mentioned new CHS Global Research Team, and he serves on that team as a research analyst with his primary role and function to provide market fundamentals, analysis, and forecast, primarily on the agriculture markets. Prior to joining CHS Global Research, Joe served as head of all of research for CHS Hedging, our futures commodity merchant, and prior to that, he spent 6 years as a market analyst with Cargill Risk Management. So those are our panelists today, and let's go ahead and get started with the moderated question and answer session. So first up, we're going to talk a little bit about policy and its impacts on agriculture and the markets. So Will, I will direct this first question to you, and that is, certainly with the new Biden administration being seated, what do you think their total view is towards agriculture and certainly farm supports? I think those are key questions for our audience.
Yeah, thanks, Nelson. I think the most telling thing about the Biden administration's stance towards agriculture is really who they chose to be the Secretary of Agriculture, and that's Tom Vilsack. President Biden obviously wanted to bring someone to that role with a wealth of experience, and Secretary Vilsack certainly has that after serving 2 terms in a row as Secretary under President Obama. Since he was nominated, Secretary Vilsack has been engaging with farm groups and farm leaders from around the industry. And I think that he's really looking for farmers to be partners with him as he takes over USDA again. And we've been able to see this already throughout the Biden administration in a lot of their rural initiatives, including vaccine rollouts in rural areas under the COVID relief plans and broadband access as well. As far as the farm support question goes, I do think that the administration understands the need for a strong farm safety net. With that being said, I'm not sure we'll be continuing to see the level of direct payments to farmers that we saw under the Trump administration from programs like the trade mitigation payments and the COVID relief or the CFAP payments. And I should still note that we are still waiting for the administration on the second round of CFAP payments to release their freeze on that they put into place when they came into the office and put a freeze on all existing regulatory processes, which is normal for a new administration.
So you would see us going back to more market-based types of support programs that have historically been in place?
I see it as more being reliant on the current Farm Bill programs, and some of those I think are the ones you're pointing to, such as the ARC and PLC programs. I mean, we never know what happens with disasters as they come, if a certain ad hoc disaster relief might be needed. But I'm hopeful, and I think that we will see at least far less of a level of those payments like the trade mitigation payments that we saw in the past. I know there was some recent analysts by, I think, Farm Bureau that said 40% of farm income may have been tied to the government over the last year. And I expect to see that number drop in the coming years.
Great. Thanks for that, Will. Let's stay with you for a second policy or concept question. And that really focuses on a lot of the carbon initiatives and carbon discussion that I think is at the top of the heap in terms of market chatter. Can you speak to where you see carbon initiatives as they relate to USDA or the broader market, and what can we expect?
Yeah, sure. So President Biden has made it very clear when he was running for office and ever since he took office that climate change and specifically carbon reduction, as you mentioned, will be a major focus for the entire administration. And I anticipate USDA to play a key role in those initiatives. And Secretary Vilsack, during his confirmation hearing in front of the Senate, reiterated that stance as well. There are some bills currently in Congress. One is called the Growing Climate Solutions Act that was introduced last Congress by Chairwoman Debbie Stabenow from Michigan, from the Senate Agriculture Committee, that instructs USDA to break down barriers for farmers to participate in carbon markets. In addition, I know there's been a lot of talk and chatter, I would say, about different ideas from USDA that they might be discussing when it comes to carbon. There's been talk of a possible carbon bank, but right now they're really in more of a listening mode at USDA. On Monday, in particular, USDA officially opened up a public comment period to hear from farmers on how the administration can promote climate smart technology. They included questions in this prompt, I'll call it, for farmers, such as how can USDA leverage existing USDA programs while addressing climate change, and in addition, questions about funding and financing ability for farmers. So right now, I really think it's important for farmers to weigh in and speak up. From my point of view, I also think it's important that any programs that are put in place remain voluntary for farmers, and that they don't take away from funding from the current suite of programs that farmers and growers rely on.
Great. Thanks, Will. Your bio obviously pointed towards significant work on the 2018 Farm Bill. So I'm sure at the time you were knee-deep in helping to make that happen. Given your experience, are there any new wrinkles we might expect out of the upcoming Farm Bill, the 2023 Farm Bill?
Yeah, well, I feel like I just completed the 2018 one. It feels like yesterday, and we're already starting to talk about 2023. And I will say, I will start off by saying that trying to predict politics that far out is kind of like trying to predict weather that far out, and it might even be less precise. And a huge reason for that, in this case, especially, is that we do have a midterm election in 2022. So depending on that, on how that plays out in 2022, it could have a drastic impact on the outlook for any legislation, including the Farm Bill in 2023. With that being said, I do think that the current leadership in place in the House and Senate Agriculture committees are great, and I have a lot of faith in them that they can get another Farm Bill done in 2023. To be frank, when it comes to shepherding difficult legislation through Congress, experience matters, and that experience is present on those committees. Specifically with Chairman Stabenow in the Senate, she was ranking member during the last Farm Bill. She was chairwoman in the Farm Bill during that. So this is not her first rodeo. Chairman Scott is new to being chairman in the House, but he has certainly been on that committee for a long time, as have ranking members Bozeman in the Senate and Thompson in the House. So they all know how to do this, and they all know how to get the thing done. I would expect in the next year or so, probably, the ag committees will start a more formal process of listening to farmers and farm groups and other stakeholders on what their priorities for a farm bill is, or are, I should say. So it's important for farmers now to start thinking about what programs in the current farm bill are working for them, what aren't, and what changes or things they'd like to see remain the same. I also do like to mention when I talk to farmers that in the past couple of years, we haven't had so many attacks on the crop insurance programs, but it is possible to see that change in the coming years and as we look forward to a new farm bill. So it's really important that we are loud and speak up about the importance of those programs and educate members of Congress on what that means to agriculture.
Absolutely. Great insights there, Will. I guess last question on policy for you, and I would be remiss if I didn't bring it up because it has such a tremendous impact on the demand picture for our crops. But can you give us some perspective on the Biden administration and the ultimate handling of the Phase 1 trade deal? What might be the fate of that, and the Trans-Pacific Partnership as well? What impacts might we see in agriculture, if any?
Sure. Yeah. So the Biden administration so far has actually been fairly quiet on a lot of their stances when it comes to trade issues. But I will say that yesterday the Senate did confirm unanimously as well Catherine Tai to be the new U.S. trade ambassador at USTR. So hopefully we will start seeing a little more clarity on how things will look in the administration when it comes to their overall trade policy. With that being said, we have had hints that labor and environmental policy might play a larger role moving forward as they craft or as they have trade negotiations with other countries. In regards to China that you asked about in the Phase 1 agreement, the Biden administration is currently reviewing that agreement. This is something that is fairly normal for new administrations to do with past administrations' policies. So it's not something that's out of the norm for us to see. With that being said, the Phase 1 agreement does seem to be working fairly well for agriculture. And, we would certainly urge the Biden administration that if they do look to make any changes to the current Phase 1 agreement, that they address the tariffs that were in place that kind of escalated the tariff situation with China in the first place and caused the need for that. Caused the need for the Phase 1 agreement to be negotiated. So I know you also asked about the TPP agreement. If we did rejoin that agreement, it would be great for agriculture in the U.S. I don't think there's any doubt about that. With that being said, I don't see that being a priority at this time for the Biden administration. They have a lot of other issues that they have to tackle. And to be frank, I don't think they have the support to rejoin that agreement currently in Congress and specifically within their own party.
Perfect. Thanks for that, Will. And thanks for your candor and insights on the policy side of the ledger. We want to transition now to talk a little bit about crop supply. And the first question I have for the panel is really this debate over acres. and acreage of corn, beans, wheat, and the other crops as well. Joe Lardy, I'll open it up to you first. What's your view on where we stand with planted acres for the upcoming crop, and how wide are the trade estimates that you see out there?
Well, we're entering into one of the most important times for American agriculture that we've seen in a long time. And the acreage battle this year is real. And I think this is going to be the big story of American ag this year, is where these acres go. And I think we have to step back and look at the overall picture. The amount of acreage that we plant in this country is extremely consistent. Looking back over the last 6 years, when you include just the total planted acres plus the prevent number, it's varied between 320 and 326 million acres. So we're very consistent. We have a defined pie of acres that we have to choose from. And the situation is we have a super tight balance sheet in soybeans. We have a tightening situation in corn. And plain and simple, soybeans just have to buy some acres somewhere, somehow. And when you ask about what the ranges look like, right now for corn, the range is between 91 and 95 million acres. And I think most people kind of settle in right around 92 million acres. And on the bean side, the range is between 85 and 91. But I think the vast majority of those estimates are going to come in right about the 90 million acre mark. And I firmly believe that 90 million acres is the absolute minimum amount that we need to have in this country. With a balance sheet as tight as it is, we really need to get 90 million acres. And the market's going to have to do some work to buy those acres, or it's going to have to change the price structure so we find a way to ration demand. And we know China's hungry. Our crush pace has been fantastic. So something's got to give in this equation. And normally when we get into a situation like this, we'll look at the markets, we'll look at the prices of the different commodities and try to figure out where the clear winner is going to be. And right now, the corn bean ratio is something that everybody looks at. And right now it's stuck about 2.5 to 1. And traditionally, that really is no man's land. So there's not a clear winner there. And on top of things, you've got a pretty high cotton price, and you've got a wheat price that's not the highest it's ever been, but certainly puts wheat in the fight as well. So just having that finite acreage pie and having multiple commodities fighting for it, we really have a battle going on this year.
Great insights, Joe. And maybe to follow up on that initial question, and I'll send this one over to Ken with IHS. You guys and your team do a lot of work in terms of acreage surveys and so forth, and are very key to the market. Ken, what's your perspective on acreage, and more important, who suffers as we compete for acres? Who's a loser in this if corn and beans are the true winners? Where are the acres going to come from? Are we going to plant corn in the highway medians this year, or what?
Hey, thanks, Nelson. Good to be with everyone today. And Joe laid up the whole scenario really well. Just looking at the gross summation of area, we're going to be about 319 million acres from where we're sitting today at IHS Market. And you had those ranges that were 320, 330 million that Joe cited. And you go back to 2014 and you were in some of those upper ranges, if you will. So it's not like we're out of the range of possibility of hitting some of those summations. And certainly when we look at the big picture of 184 million acres of corn and soybeans combined, that will be record. And when you do add the wheat into the picture, that's not necessarily a record total area, but what we're going to see is that that 184 million is going to attract wheat. And certainly spring wheat, we're seeing some attraction away from there. But also, if you look back, I mean, last couple of years, we had very high levels of prevent planting. So you're going to basically from last year, 9 million, whatever it was, and we're going to gain on that. And then, of course, in CRP, a little bit of a gain, and combined changes year on year with CRP and prevent plant. That's probably about 7 to 8 million acres right there. So number one, there's really not a hurting anyone as much as everyone gets to participate. And that's going to be important as we go forward here. But then we do see that you're going to attract more land into production, maybe some marginal area That wasn't there in the last few years here when we had a bit lower price environment, but we saw this before play out when there was more land that was brought back in. We're seeing quite a bit in the Dakotas coming back into both corn and soybeans in particular. And I think as I looked at our numbers, when we survey, we've been surveying since December, and we've been putting out area planting numbers since September. We're really looking at a situation here, and our next numbers will be coming out early next week as we look at what the plantings could look like. So we're sitting at, with the Dakotas, that probably could be, in North Dakota in particular, a bit more corn and soybean area, quite a bit more corn and soybean area up there. But overall, we're looking at 94 million corn at the moment and 90 million soybeans. So we're a little bit high on those with where Joe was talking. But, at the end of the day, we could see, we think the 184 million is going to stay pretty robust. It's going to be that mix as we go into the fields and start looking at farmers, many of your farmer members, as they go into the field, looking at the price environment here. You're making money, take advantage of it. But at the same time, as we saw a lot of good field work last fall, we see a lot of good sales of fertilizer, and the price of fertilizer is quite high. When we talk to our Protocon group, you're certainly seeing quite a bit of activity around that as we go forward. So we think that maybe there's going to be that momentum going into planting to really focus on corn as much as they can. And with some openness here, that could be very beneficial to corn.
Great. Thanks for that insight, Ken. Before we leave the supply topic, one quick question, and Joe, maybe I'll pitch this one back over to you, and that is, as you look at the USDA balance tables that have been put forth, we've got some tight carryouts, as you mentioned earlier, but we've got tight carryout despite USDA assuming record types of yields, particularly in corn and soybeans. From your perspective, Joe, are those record type of yields reasonable as an assumption, and what could derail us?
Well, the U.S. farmer has done a great job in achieving really high yield numbers. And when we look at the trend line yield that we've seen in the past 6 out of the 7 years, beans have gone above trend line. On the corn side, 5 out of the past 7 years, corn has gone above trend line yields. So I think people have this mindset that no matter what the trend is, we're going to do better than that. So there's instantly a little bit of optimism as we approach the planting season. I generally like to be a little bit more conservative than that. All of this is in the hands of Mother Nature. So it's really one of those things that's beyond our control. Even if we get into the fields a little bit earlier, there's no guarantee that Mother Nature is going to cooperate with us. And when you start out with such a high yield level, it really puts a lot of premium into the marketplace to deliver that. It kind of skews the way that we have to approach the market. So that's always a challenge for me when I start to lay out initial balance sheets. The other challenge, I think, going into this year, looking at yields, is going to be what the drought monitor looks like. And if you look at the drought monitor 1 year ago, it was basically a blank canvas. There was no problems. It looked really good. But you look at the drought monitor today, and it looks like a Bob Ross painting. There's color everywhere. And I mean, complete states, Minnesota, North Dakota, South Dakota, Nebraska, they're completely covered in some level of drought. And so I think that definitely should be a real concern as we go into the season, to say, you're expecting, some areas of North Dakota, which are not traditionally your highest yielding areas, with a high level of drought, to produce an above trend line yield. So there's some very lofty expectations as we go into this planting season around yields, and there's definitely some concerns to balance those off.
Perfect. Thanks for that insight, Joe. So I think that those couple of questions begin to frame the narrative on the supply side across multiple crops. Now I think we want to change gears a little bit and talk about the demand side of the ledger in each of corn, soybeans, and wheat. So Ken, let me lead off with you. Really talking about corn and the demand side. What are your expectations for corn exports as we move forward?
Yeah, for the United States, we're looking at a corn export number of 2.85 billion bushels for this year. quite a bit higher than USDA's 2.6 billion. So there's quite a bit of work there that USDA is going to be having to do next month, and to really bring that up to a position, because we look at export sales, which were very well this morning, in addition to 3 days of daily corn sales to China with corn. I think it's be very important, and that certainly is fulfilling what we have as a 2.85 billion bushel, and we see that is as much as that's been a record. We see that there's potential for that to go higher as we go later into the marketing year, and specifically as we look at Brazil, where their soybean plantings were late last year because of some dryness, and then as they got into the fields, they finally caught up, but that meant they were harvesting later, however, and that created some challenges now as we start looking at the plantings of their winter corn crop, which has become very sizable. And as we look at some of the planting pace for corn, winter corn in Brazil, when we start looking at the progress and the harvest dates, now all of a sudden you're looking at harvest dates are several weeks behind in Brazil, and that means they're not going to be sending as much corn to the export market as they normally would. Rather than really going at it in July and August, you're going to be going August, September to really push into what would be their export period for that winter corn crop. And that just means the U.S. is in a position to gain some opportunity there. At the moment, Argentina has got the FOB opportunity as a low-cost supplier of corn in the world market, but they're probably getting close to being done with some of that as we go forward here. And then we start looking at Brazil when they would come. Ukraine has a little bit here, but the U.S. still is the only place to get corn today, and will continue to be that case as we go through. So we see some firmness that could emerge in this corn environment. We've got China plugged in for 25 million tons for this marketing year, 2021. And then for 21-22, we've got 25 million tons as well for China that's plugged in. USDA has been very reserved in the way that they go about putting in for China, just because of the TRQs. And certainly that is something that's slowed them down from fulfilling that. But if you look at other places around the world, Japan has come back with more demand, as has South Korea and Vietnam. And then you start throwing in some other countries just on the margins. After a while, it all adds up. Unlike soybeans, that you've essentially got one very, very large market, China. Corn, you got China's pretty big this year, but you got a lot of spread for corn to go in a lot of different markets here. So we're looking at a setup here of more upside potential for U.S. corn exports as we move through into the summer then.
Great, thanks, Ken. So that's certainly some insight on global demand for corn. Joe, let me turn it over to you to talk about more of the domestic demand situation. And by that, I mean, does domestic demand for gasoline stay strong, and what's the future of that ethanol blend? And perhaps what does electrification mean longer term for something like the corn crop? I know it's a lot of questions, Joe, so we'll try to break it down.
Sure. So we'll start out with the gasoline demand, and ethanol demand is completely tied to gasoline demand. And we saw gasoline demand fall off a cliff when the COVID situation happened in early 2020, and that has rebounded, and ethanol is basically tagged along right along with that. And just this week, we've seen gasoline demand come back right about to those pre-pandemic levels. So gasoline has made the full transition and kind of come back to where it was before. Ethanol demand is close. It fell off just like gasoline demand did, and we've seen a good rebound in that as well. We're still about 10% behind where we were last year. So there is a little bit more work that ethanol could do going forward in the future, but it's not quite all the way back yet. But longer term, when I look at the ethanol market, you touched on a very interesting point, and that's kind of the electrification of the market. And we know what the ethanol market did, over a decade ago when we phased in the ethanol program here in the U.S. It was a game changer for the U.S. A third of our corn production goes into ethanol usage. And longer term, I'm really nervous about the ethanol market because we're seeing such a massive push for electrification. across not only the country, but across the world. And just think back to the Super Bowl, and the big car ads were all for electric vehicles. You know, you had the Edward Scissorhand one for Cadillac. That was an electric, fully electric vehicle. And then Will Ferrell was going to go over to Norway and, he wants the US to take the crown as the electric vehicle leader. And so when you're seeing that kind of mass advertising to promote a campaign, I really think it's going to come sooner than later. And Volkswagen has announced it's going to cease production of gasoline engines at the end of the 2026 lineup. That's within sniffing distance. That's only 5 years away. And we know that's not, it's not going to wait until 2026 to happen. It's going to start getting phased in now. And another interesting thing is going to be on the infrastructure spending. When you look at where the E85 refueling stations are in this country compared to the electric charging stations, it's really interesting that there's a really heavy concentration, obviously, in the Midwest for the E85 stations, but across the country, we're seeing a lot of widespread interest in it. And now we're starting to see there's a city in California that's mandated that all new car sales need to be electric. They're basically legislating away from gasoline engines. So we're really seeing a new phenomenon in this country, really making a very, very strong push towards electrification. And that's going to eat into gasoline demand, obviously, and that's going to start hitting the ethanol market. And even if it's only 10% reduction in ethanol, that's 500 million bushels of corn. So we're talking about very significant amounts of potential demand destruction that we really have to be watching for, and to see how quickly this electric vehicle adoption comes into place here in the U.S.
So great remarks and insight, Joe. And I think I have to ask before we close out this demand side conversation on corn, I want to pivot back over to Will. And based on Joe's conversations, Will, can you give us some insight as to your thoughts or DC's thoughts on the RFS under the new administration? I think that's an important topic for us to cover.
Yeah, sure. No, it's extremely important. And my colleague out in DC with me, the second half of the DC lobbying team, Dan Maurer, this is something he watches and works on extremely closely. And I would say that we do expect the Biden administration to administer the RFS in a way that increases the use of cleaner burning fuels like ethanol, while putting pressure on on oil usage. But that would mean higher RVOs, which are renewable volume obligations, higher RIN prices like we're seeing now. I will note after 2022, I believe it is, the Biden EPA will have authority to set RVOs to the congressional set RVOs to what the congressional benchmark set in the RFS will expire. And there's no telling exactly where they'll set those RVOs to post 2022 after they do expire. But we do expect them to possibly be fairly stringent and demand increased usage of renewable fuels. So that's kind of where we're at right now. It's something, like I said, we're watching extremely closely, and hopefully we'll have a little more clarity on soon. But it's certainly something that's a top priority for CHS Government Affairs.
Great. Thanks, Will, for those insights. Let's pivot now and talk a little bit about the demand picture for soybeans. And let's go ahead and start out on that export theme as we did for corn. And Ken, let me turn it over to you. What are your thoughts on the strength of the export market for beans? How long can we expect that trend to continue? What's the consensus viewpoint from your colleagues?
Yeah, thanks, Nelson. And certainly looking at the soybean export outlook and what we're seeing, the U.S. program is for 2021 old crop here is winding down as we look at really exhausting all that we've had, and as South America, Brazil in particular, is ramping up its export harvest pace and then moving quite a bit to the export channels. We're seeing very strong imports for China. It's well over, right at over the 100 million ton mark for this year, and even more so next year. And so the U.S. has benefited well, but it was a fast pace for Brazil last year coming into our harvest, and we ran real fast. Now, we've also seen other markets that have opened up here a little bit more and take on some steady to higher volumes as well. But as we look at China and think about what brought this on, it's really been around their African swine fever seemed to have been resolved for a while. However, most recently, some work that we've been looking at is anywhere from 7 to 10 million hogs have been affected most recently in the last week or two. That's a very small number of hogs relative to a 400 and some, or however you want to count their hogs all at one time, supposedly alive. And you've also seen a lot of investment in their operations, more vertically integrated operations, and having hog hotels type thing where biosecurity is the watchword at these locations, and to really protect the operations from that. And that's really stabilized and brought back quite a bit of this demand that we see today. But during that time, China was importing some pork products, but they also ramped up their broiler production as well as their aquaculture on some of the substitution meats. And that's been very important as you look into that. And that really built another base of consumption for feed grains. And we're seeing these large vertically integrated companies bringing in grandparent stock, resupplying the operations, protecting them, and then they have their own compound feed operations on site. And that means you're not using much of the backyard behavior of supplying that. It's really more than running it through the entire system with more of a high quality feed component, despite recent announcements that we've heard that maybe China's asking the reduction of corn and soybean meal in some of the rations. But nonetheless, we're seeing on the bean side of things very strong, even though their margins have suppressed a little bit here recently, still fairly decent. You've kind of in between the Lunar New Year and kind of coming into the late spring here and start to recharge the system here. We would expect China to continue to see the bean program be very strong. And again, other parts around the world, we see a pretty good pace here. But with what we're seeing on the tightness, as Joe outlined earlier in his remarks, very tight situation here. And that's going to probably be the challenge going into next year as we look at, instead of the very high level of soybean exports this year, we're going to be looking at a lower pace of about 2.5 billion for next year. We're pretty much 93% of the way to our 2.65, I think it is, billion bushels. And then we'll ease it back going into next year.
Joe, let's stay on that theme of what I would call feed ingredient demand for products like soybean meal. What's your view on sort of the global livestock demand and how that impacts meal demand and the knock-on effects of trading out into other products as well?
Sure. So I think, like Ken mentioned, the rebound in China's hog herd is really the key driver in all of this. And as their herd came back into normal levels again, their feed demand correspondingly goes right with it. And as part of the USDA's Outlook conference, they even touched specifically on the changing operations that China has put into place, the hog hotels, like Ken mentioned. It changes the way you approach the feed side of the equation. Before, when you were more under the village model, you were just feeding table scraps or whatever was available. Now in the hog hotel model, more industrial, there's more of a formulaic ration that needs to be given to those animals. And therefore, the feed demand of corn and meal is bumped up because of that. And beyond that, I think also, as we come out of this pandemic, I think there's just going to be additional pent-up demand as people get out, get back into restaurants, kids get back into schools. There's going to be a higher protein demand necessary. We have record large herds here in the U.S. China's getting back to their record large levels. So I think those things are playing in for a solid demand base globally and domestically here for meal. I think the one thing that we do have to watch out, like Ken touched on, is if we do see ASF, rear its ugly head again, whether it's China or anywhere in the world, that could be the one red flag to look out for that might nip at demand.
Nelson, just real quickly, I misspoke. Our soybean export forecast for old crop 2021 is 2.25 billion, and for new crop 21-22 is 2.2 billion. Still very similar, a little bit softer, but nonetheless, I want to make sure I get that corrected out there. I was giving you the corn number, I think.
No, I certainly understood, and thanks for that clarification, Ken. And certainly thanks for the remarks on soybean demand. We want to close out our moderated Q&A session. I want to make sure we leave time for audience questions, but I don't want to leave the wheat conversation behind. So maybe I'll open it up to either Joe or Ken. Talk a little bit about the wheat demand that's out there, and how it relates to the jockeying for acres that we're seeing on the supply side. Joe, maybe I can start with you.
Sure. Wheat just feels like it's going to continue to be the outsider in this market. And as we've seen, the U.S. farmer has clearly shown a preference for corn and bean acres in this country. And 20 years ago, we planted about 20 million more wheat acres than we are now. Those acres have gone directly into corn and beans. And I think we have a wheat situation where the balance sheet is very comfortable. We have a 40% stocks to use ratio in wheat compared to right around 10% in corn and only 3-4% on the bean side. So the wheat balance sheet feels very comfortable right now. And the other kind of international flair for the wheat market is you can grow wheat pretty much in every country. And we've started to see a lot of global production, both in northern and southern hemisphere countries producing wheat. So the global balance sheet for wheat is also very comfortable as well.
Yeah, and I would appreciate that. I would continue on that theme globally as we think about the front loading of exports out of Russia as they're coming to the point of shutting off the pipeline with some of the export tax that's going to be implemented here, much front loading there. And now that's going to start easing off here. So they really did a dent into the United States participation out there. And you're going to see some of that shift as we go forward here from that front loading. But then the EU had a little bit of a decent program here, but they seem to have adequate supplies as they would go forward. But, this whole thing around the China sort of demand, they've been very solid on wheat imports as well from the United States here. But maybe, we look at the wheat feeding dynamics globally. That's going to be important as we go forward here. And we've got the potential to see increases here in the United States in our balance table for wheat feeding from where we are today, and to really factor into some of those pricing that we would see. And you look globally on wheat feeding, it has also increased quite a bit here in this last year. So you're seeing that substitution effect, and we saw the high prices, and those started to emerge, and people who are not able to participate in for corn or soybean meal or something, they were finding those alternative sources for feed purposes. And so we're going to see that will be one of those underlying stories to watch. But here in the United States, it's all about corn and beans at the end of the day. And maybe we hold steady in a couple states, but Kansas is going to pick up a few more acres of beans and quite a bit more of corn, it looks like. And so you're not going to see still what was known as the wheat state really be the wheat state anymore. It's really a corn state when you apply that yield potential. Yield potential on corn is so important on an acre of land.
Mm-hmm. I think the other story that we'll have to wait and see on the wheat market is obviously we all experienced that giant cold blast in February that came down, and we know it damaged some wheat. But the problem with it is you just never can get that quantified until sometimes darn near the combines are rolling. So, if we have a situation where we shift a lot of acres away from wheat, and we come to find out that we possibly did a decent amount of damage with that cold snap, there's a potential for an interesting bullish story for wheat, but that will be a few months down the road for sure.
Right. Thanks, Joe and Ken, for those remarks on wheat. So that kind of wraps up the moderated question and answer session. And we want to save time here before we close out the entire session for some questions coming from you, the audience. We know that this interaction is valuable, and there are topics that we may not have touched upon that you have a significant interest in. So as a reminder, at the bottom of your Zoom screen, there is a question and answer button where you can log your questions. But Brittany, can you help lead us into the question and answer session from our audience with a few?
Absolutely. So our first question is, do you expect Mexican corn buying paces to increase in the second half of 2021?
Yeah, I think where we are, we would say yes. And you've seen that Mexico has continues to increase its purchasing of corn at higher levels. And this will be the third year in a row. And it's going to be very steady and strong. And we would anticipate that even the second half here, we should see that steadiness as we go forward here and take advantage of that. Again, the proximity to the United States, that the United States does have supplies, they'll be continuing to buy from here in a steady pattern that they've been doing.
Brittany?
And kind of a follow-up to that one, what about Mexico's intention to move away from GMO corn?
Yeah, that's been a challenge here because that came up this year and a bit more forthright. And that could be a bit of a challenge. However, they've been so accustomed into their feeding and to their dynamics that it's going to be, where else do they go in the world for non-GMO to feed at the levels that they are or to buy at the levels that they do? And that's going to be problematic going forward, that the United States is the supplier to Mexico. They get just a freckle from other locations. And so be able to get it from the United States, it's going to be very challenging for them. And I think there's going to be a lot of pushback. I don't know if Will's got some insight or Joe, but I find that given our level of GMO, non-GMO, they're going to have to keep that in place somehow.
Yeah, no, I agree with everything that Ken just said. And I would just add from a government affairs perspective, when we were made aware of that policy push in Mexico, it was something that we became concerned about, and instantly, used our connections with the United States Trade Representative here in the U.S. to flag that with them. In addition, with the State Department, seeing how it works within the how that policy fits within the framework of the USMCA agreement that was signed under President Trump. So it's certainly something that we're working on from the government affairs perspective as well.
Brittany, I think we have time for a few more.
Yep. All right, next one. Is China placing any of their imports into its reserve stocks, or is it all being used for immediate feeding needs?
Well, it's always hard to tell what China is going, what they're actually doing with a lot of their stuff. But just given where the domestic levels are there, I have to believe that the vast majority of it is being used. China feels like they're a little bit short across the board. And certainly with the protein demand now that they have and the feed demand because of that, there's a need for it. And I would have trouble believing that China's just putting that stuff away for a rainy day.
Yeah, I would say too, Joe, is that we've been seeing these strong crush margins. We've also seen some very decent feeding rates for soybean meal in particular, and that there's a hungry herd out there.
Yep.
And they just don't have enough room probably right now to keep staving off some that goes into their reserves. They're feeding it seems, as it comes in, just looking at some of the internal margins and some of the internal prices on the grains. Maybe there could be some filtering that way, but at the end of the day, it is China. And at the end of the day, it's why do we on our ending stocks tables always show the world with China and the world without China? Because we just don't fully trust China's data.
All right, one more question around China. Do you have good confidence that we will indeed ship all or most of all of the outstanding sales to China?
I think this is where you're going to get a different answer from Ken and I. As Ken mentioned, their balance sheet table has a much stronger export figure. And I tend to be very conservative on this because direct words from the USDA and their question and answer segment after every WASDE, they get hammered from the audience saying, why we see 21 million tons of corn sales to China on the books, but yet you're not raising the export number. Why is that? And the USDA's response continues to be that China has TRQs, so they have tariff rate quotas in place on corn. And any additional tonnage above that TRQ is subject to a really high tariff, so it makes that corn really expensive to bring in. And so the USDA has said, until we see China change their TRQ policy, or until we see US shipments to China reflecting that additional tonnage actually being moved, we're not going to change our export number. And so I'm watching that really close. I watched the numbers get shipped out on Monday and how much went to China and tracking that number. If that number comes to fruition, it's super, super bullish. But again, like we've said, it's China. You just don't know what they're going to do. Have they been buying corn as a goodwill gesture, or do they really need it? And the question is, do they need it now, or could that stuff get rolled into the next marketing year?
Yeah, Joe, that you do bring up a good point, and we've got a strong number in there for this year and next year. We too are watching that and just looking at some of the sales here, and we're kind of feeling very confident where we see things going. The luxury we have is that we're not beholden to having to adhere to a government speak on policy. We're trying to look at what it is that we're seeing there, and the reality is, if they kind of does, if the USDA comes back and ups their exports from the 2.6 that they are, 2.65 billion bushels for this year, and go up, that's just going to hit that balance table, ending stocks really, really quick. And that's going to create some challenges because we don't think there's much more room to change ethanol. I think that the comment was really good about driving potential that's going to come. So for us to ship at the same time, from a logistics standpoint, I know, Nelson, we talked about this in the pre-call, just thinking about logistically, man, we had a phenomenal December. December is usually not a record month. This year's December was a record grain soybean month, and that was a transition from soybeans to corn, and you're moving a couple of different crops there, and that's important. Now, soybeans was essentially going to one country, China. Corn is being spread around the world, and you're getting a little bit more wheat in there and other things, and so the logistics has been holding up well. And you have a record grain export program, and really no one's noticed because the logistics has held up well. The railroads have been fairly wide open to the West Coast and to other locations with good liftings, despite some weather we saw in the PNW. And then certainly in the U.S. Gulf, they've had very adequate draft on the Lower Miss. You did have some freezing on the Illinois River, but grain barge lockings have been very decent. And you're still seeing this adequate flow moving through here. As we go forward, we've got plenty of fleet capacity in the barge side. Even on the rail, we got some openness. I think the risk could be if we get even more ramped up in our transportation because the economy comes back, and it's been tough on transportation. You've had a lot of logistics snafus because of the imbalance of movements and where it's got to go, and the ports have been backed up for container traffic. But nonetheless, we are seeing even still very solid volumes moving grain in a container. So the system has been performing well. It's just now seeing how do we move to the end of this crop marketing year all the way through into August then.
Great remarks on logistics, Ken, that you never hear about them as they're working well until they don't. And that's when we hear about them quite a bit. So I think that we're coming to the close of our hour. And I certainly want to thank everyone for attending, and certainly thank our panelists. I thought they were excellent and provided great insights here today. But certainly for you, the audience, we want to thank you for your time today. And we hope that you found some of the remarks made by the panelists informative and insightful, and some things you might be able to use and information you can use as you head into the planting season. Just a quick reminder that the program that you saw today is being recorded. And each of the meeting registrants will receive a link to the video, so you have an opportunity to go back later in the day or the week or whenever and review some of the materials and the remarks that have been made by our panelists. I would also like to encourage you to continue to watch for more information for around the table events such as these over the next few months. We're committed at CHS to planning additional sessions on topics that are important to you, that are certainly related to your core business of energy, agronomy, and grain marketing. And of course, if you have other ideas, please send them to us and we'll certainly take them into consideration. So once again, thank you everyone for attending, and best wishes for a safe and very productive spring season. Thanks everyone.